Time to check in with Amanda Lang. She is host of Taking Stock, which of course airs Friday nights, 6 o'clock here on BNN Bloomberg and the iHeart Radio Network. And Amanda, there are a lot of numbers to have to sort of sift through today, but I wanted to start off with this, and I know we'll get to job numbers in a second. So we're coming off a month, November, which from what I understand, best month in global markets literally in 3 years. But here in Canada, contrast to the U.S., our economy actually fell in the last quarter. What's going on here? Is this all about higher interest rates?
It is, and from what we can gather, of course, it has to do with consumers and how we're feeling, which shows up in different sets of numbers on our confidence. The GDP data was surprisingly weak. It was down more than 1%, and that was more than analysts expected to see. On the plus side of the ledger, they revised the second quarter data, so that does mean we're not in a recession because you need 2 quarters in a row of declines to be in a recession. So dodged a bullet. But it probably is because people are pulling in their spending, and you do see, we're starting to see layoffs pick up across, especially some of the big financial sectors, for instance. And the question will be, how does this last quarter look? Early indications actually are that the economy did eke out some growth in October. So the question is, do we just get one negative quarter, 3-month period, and then we get growth again? Whatever we get, it could be mild. That's the good news here.
Okay, I want to ask about one thing. I wonder if this is one of those things you look at and you go, oh, that's a bad sign. So Canadian banks, from what I'm reading, cutting jobs, taking higher loan loss provisions. Is this a signal there's another shoe to drop?
I mean, the banks are definitely getting themselves ready for mortgage renewals that are going to be painful, so that we know the next couple of years there's this wave of mortgage coming. All the people that signed up for mortgages in pandemic and right after, they're 5-year terms, and those will renew in 25, 26. So the banks are kind of getting ready for the slowdown and that. So what they set aside for bad loans is definitely on the rise, although it's not crazy high. It's not, at a record level. They're being prudent. They're definitely also doing a lot of layoffs. To that point, maybe because they took on too much staff when times felt like it was always going to be good and rates were low and, the party was going to go on forever. And there may just be a little bit of kind of streamlining of their operations right now, which means that these jobs may not come back. Some of them will be permanently removed in favor of new technologies or a new way of doing things. That is painful, though. Like we just heard TD announcing another 3,000 layoffs. That's a big number to absorb into, that's obviously across a big footprint. But that's a lot of jobs, and that's meaningful.
As you're talking about renewing mortgages, I'm trying not to cry because some of us are due this spring. Bank of Canada interest rates are holding for now. Is it way too soon to start hoping that they might start to come down?
Not way too soon. We certainly do have people saying that there's a possibility of that. I mean, I think if you want to be really kind of, on the less risky side of the ledger, you'll assume they stay where they are and figure out, do the math based on that. Mm-hmm. They could well be starting to come down, Natasha, if we see a slowdown that the bank is responding to. But there isn't any reason. They're not so high that the bank would need to lower them just to get back to normal. They're kind of where normal is, to be honest. So we might also settle in here and get used to this.
I saw, speaking of jobs numbers, et cetera, but the thing that perhaps is as troubling or maybe more troubling, respondents to a Bank of Canada questionnaire. I wonder if this is even a story responding to this idea of creating a digital loonie. What is that about?
Yeah, it's interesting because the Bank of Canada has been doing a lot of research on this. As you can imagine, all central banks are looking at their own version of a cryptocurrency, right? Because if they're going to exist, it just makes sense for the central banks to have them as well. They did a survey, but to your point, should we even talk about this? It was sort of a self-selection of people who wanted to respond. And the biggest reason that those folks gave for not wanting the central bank to do this is they don't trust the central bank. Now, I don't think most Canadians would feel that way. I think most of us feel fairly comfortable that our dollars, it's the same thing, right? Whether they're paper dollars or digital, they are backed by government entities like the central bank, and we tend to trust them. There's nothing about a digital currency that, is any kind of less anonymous than cash, because if it's done properly, it's still an anonymous system. So, I'm of the view, I think I've probably said this to you guys before, but we will get a central bank digital currency. All these little cryptocurrencies out there will go away because they're just kind of fringe, they're sort of ideas. But when you get down to it, you do need governments to have the scale to back these things, and you need them to manage them, because how much currency is in your economy does matter. So we don't actually want that happening from, beyond our central banks. So it'll happen one day, would be my view.
Okay.
All right, let's talk a little bit more about jobs. The November job report out, Stats Canada giving the numbers, 5.8%. So that's up a little bit.
It's up a little bit, as we know historically for Canada, that's not terrible. We kind of will land in the mid fives and still feel pretty good. So what we're seeing is the same story as last month, which is we did create jobs, actually more than economists were looking for, almost 25,000 jobs in the month. But we have to account for the almost 80,000 new workers that were now they're added to our labor force. So we do see an uptick in unemployment because the economy can't create enough jobs for the new workers. Now, that may just be a lag effect, because this is partly driven still, but this is the story, right? This is an immigration story. And, you can imagine that somebody who becomes a landed resident or a new Canadian, they're not going to work the next day. It does take a little bit of time. And when their spending starts to create added demand, that's where you get the job growth. So that all takes a bit of time.
And how's the Bank of Canada digesting all this between the GDP numbers, the job growth, modest as it is? I mean, what's Tiff Macklin doing, sitting back, looking at the numbers and thinking, you know what we've done with interest rates is fine, and I know we can't predict what's going to happen, but where do you think we are overall with all these numbers in terms of what we're looking at?
I mean, I will not pretend to know what the central bank's thinking, of course, and they have super smart modeling and people that, were digging into this in much more depth. If you're asking me what I think of how they've done, I think Tiff Macklin's cracking open a bottle of wine tonight and raising it.
Wow, okay.
Because I do think they feel quite comfortable with where inflation is and where it's tracking. And barring any unforeseen shock to the economy, everything's kind of trending the way they want, including the fact that we're seeing declines in our economy. We're seeing that contraction, but it's not terrible. This is all manageable stuff. And if we get this soft landing everybody talks about, and in the new year, just in time for Natasha's renewal, we can see, maybe even bring rates down 25 basis points. That would be kind of nirvana, I think, for the central bank.
Oh God, yeah.
They did signal that, right? Last week they said, we feel pretty good about things, but we're still alert to having to raise again. They don't want us to relax, but they're saying we might be there, folks, which is, I think we could take that.
By the way, I will note you said a bottle of wine, not a bottle of champagne. So
Fair enough. Everybody's preference. Maybe
okay.
You prefer champagne.
Last thing I want to ask.
Oh, I have one too.
Yeah, just this idea on losing financial confidence. I know this is one of those things we talk about from time to time. When there are repeated months where people continue to lose confidence, you have to think that puts us in a bit of a dire situation as well for the average consumer.
I mean, it does, and we've talked about this, how confidence is self-fulfilling. The Conference Board's confidence data this week is really shocking. It's one of the worst reading in their history in 60 years. And in terms of things like our desire to make major purchases, which is important for the economy, we're at 2002, the last time we saw this bad a level.
Wow.
So what I think is interesting about that is, we just got finished saying things aren't that bad. We might have actually, dodged the worst case scenario here. But still most of us are feeling pretty gloomy. So the question is, do most of us know something that the data doesn't know? Or is it that kind of headline effect where we've been talking so much about all this bad stuff that people just feel, that they better be cautious and keep, sit on their wallets, which could in turn turn into a recessionary behavior.
All right.
Fair
you answered
point.
my question in there.
All right.
Thank you.
Amanda, as always, want to thank you so much. Appreciate your time and have a great weekend.
Yeah, you too.